Hey everyone, ARK Invest back with another Roku video for you today. So I already covered Roku twice on this channel. If you haven't watched those videos, those are going to be in the top right corner. In this video, we're going to go over again Roku's core business, because it's not really a streaming play. Yes, when you buy Roku, you get the streaming site as well from the Roku channel, the whole streaming platforms on Roku. But Roku really is an advertising play, and that's the focus of this video. Focus on advertising and the future of TV. So stay tuned for that. I also want to mention that today, 2 p.m. Eastern on Twitter Spaces, we're going to host a great talk. We're going to talk about Roku, the Trade Desk, Facebook, Snapchat, Twitter, Pinterest, and more. So if you want to join us 2 p.m. Eastern on Twitter Spaces. I will be retweeting the space, so you'll be able to join. And before I continue into this video, I just want to thank everyone that has been subscribing lately. We're on our way to 16,000 subscribers. So if you haven't subscribed to this channel, maybe hit that subscribe button. And if you like these videos, leave it an early thumbs up, as it really helps me outgrow the channel and get my videos out there. I would also like to thank the Motley for sponsoring this video. And again, these are my views and my views only. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Full Offers. Through the Motley Fool's Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Alright, so first up, you've probably heard it 1,000 times. Roku will not be able to compete with all the other players in the market, the other streaming platforms in the market, the Netflix, HBO, Apple, Prime, Disney+, etc. But actually, on the contrary, Roku actually is a gateway so that you will be able to view all those streaming platforms on a Roku TV. They are basically the platform, the underlying operating system for you to be able to stream all of those services. Which brings me to my next point, and maybe explaining some terms that you will need to know in case you read on Roku, the Trade Desk, and all these others in this market. So first up, we have CTV, which is the connected TV, which is basically Roku TV, Apple TV, Fire TV, Chromecast, etc. Then OTT, over-the-top media, which are Netflix, Hulu, HBO, Disney+. CTV is the device, the operating system used to stream OTT services like Netflix. Now, you also have another term, which you probably all know by now, which is linear TV, which is the traditional type that we have been consuming for years and years, unless you are 1 year old, but an unlikely viewer on my channel. Linear TV is basically this traditional system where a viewer watches a scheduled TV program at a time that it is being broadcasted on a specific channel. That means that everybody that watches this channel will see this specific program and most likely will see the same ad as anybody else. But most of you know this isn't working anymore. People have been cutting cords each and every year, and it's actually accelerating. And then you have the other types, the never cores, which are people that never had linear TV or cable TV, because nowadays people want to be able to watch whatever they want, whenever they want, how they want it. So that's why you will see a huge shift from linear to connected TV. Now, I said this in my previous video. According to an analyst at ARK Invest, Roku users who cut the cord saved approximately $75 per month. With that $75, you could get Netflix, HBO Max, Disney+, Amazon Prime, Showtime, and Peacock. Obviously, it depends where you live, so the prices may vary. Now, if you still don't know how big Roku actually is, so Roku is still the #1 operating system for TVs in the United States. They're also #1 in Canada. 1 in 3 TVs sold in Canada is a Roku-powered TV. They're also the #2 smart TV platform in Mexico, #1 still being Samsung. They just started out in Brazil. Early signs are positive. There's also now in the United Kingdom, but still very early days. So we're going to have to wait and see how that works out. Alright, so when you look at Roku's financial statement or Roku's business model, there are 2 revenue streams: platform revenue and player revenue. Now, platform revenue is everything on the Roku platform, so basically advertisement, subscription, content distribution, etc. Player revenue is mostly the hardware, which was actually their largest segment back in 2017. Right now, this only accounts for approximately 25% of their trailing 12-month revenue. Now, before continuing and jumping into the Roku channel Flywheel, just a couple of other points of how Roku actually makes money. So let's say you're on the home screen, you see all of those channels. If you probably see Netflix as number one on the top left corner. That's because Netflix paid to be in that position. If you see a new Disney movie, let's say on the right side being advertised, this is because Disney has paid for that to be advertised on the home screen. Now the same goes for the remote control. If you see buttons for a specific streaming platform, whether it's Hulu, Netflix, or somebody else, is because they paid to be on that. And that's just another way for Roku to make some money. Now let's jump into the Roku Flywheel. So it looks just like this, which is pretty simple. If there is a lot of content and good content, that drives engagement, drives more people towards the platform, bigger audience. If there is a bigger audience, more data has been collected. That appeals to advertisers. So advertisers start advertising and spending their ad revenue on the Roku platform. More ads coming in, more revenue coming in. They can invest in more content, and that continues. More content, more good content, more people come to the platform, and the flywheel goes on and on. Now, just to show you how big of a deal streaming actually is. So according to eMarketer, Americans on an average day will spend more time on TV streaming than all major social media platforms combined. And if you think about this, this is a very big deal because, well, the larger part of maybe a targeted audience is unavailable to marketers or advertisers. How will they reach those people? Probably through a platform like Roku. How would they do that? Why choose Roku? We're going to discuss that right now because Roku has actually acquired a couple of companies during the last couple of years. Talked about this also in my last videos about Roku. So first one is DataXu. In 2019, they acquired this company called DataXu, a DSP platform. DSP, we talked about this as well in the Trade Desk video, demand side platform, which is used to purchase advertising in an automated way. Roku then integrated it with OneView. The OneView ad platform can understand when viewers have already seen an ad on traditional TV, so advertisers can use the platform to create audiences of streamers who have or may not have seen an ad on traditional TV. So let's take a look at this visual right here. 3 segments. The first one, total TV visibility. So one person watches football on cable TV, then streams a free action movie on the Roku channel. OneView delivers ad to the football viewer who didn't see the ad on cable. Then going to the second segment, cross-device advertising. As you can see, the first one is a mobile phone. So OneView serves a mobile ad when the streamer is browsing the mobile web, sees a follow-up ad on the laptop, and then eventually buys the product on the website, which leads to the last step that will eventually become a repetitive step, measure, optimize for better outcomes. So OneView optimizes the campaign spend and audiences to reach more of the most engaged viewers. So to simplify it, Roku's technology with OneView, DataXu, and we'll see in a bit with Nielsen as well, is basically helping marketeers and advertisers target the correct audience without having to spend an extra amount of their budget in hopes of targeting the correct one. And lastly, Nielsen, which is a very, very big part of the whole Roku ecosystem. They completed the acquisition this year. They acquired Nielsen for their video automatic content recognition or ACR and dynamic ad insertion team and technologies, which will accelerate their launch of an end-to-end linear ad replacement solution in partnership with programmers. This in turn will allow advertisers to maybe have a better overview on whether or not they should be spending more to target this specific person or segment or less, or maybe through other channels. Now, one thing to note, and that's something I said at the start of this video, is that Roku really isn't that much of a streaming play, but rather it's way more of an advertising play as we move towards a complete disconnect of linear TV towards a connected TV universe. But luckily, if you invest in Roku, you get the streaming and the advertising side as well. Now, before I end this video, I just want to mention a couple of bearish points. Open questions. If you know the answer or if you have an opinion on that, leave it down in the comments below. So first up, who says that Roku's success in the United States and Canada can be replicated in international markets like Europe, for example, or maybe Asia? Right now, this is just a story of time will tell. Second, and that's something we discussed also on Facebook and on a space with Ophir, is what if Roku becomes too big, too fast, and suddenly one of those giant companies are like, hey, their model is working pretty well, maybe we can replicate that, and since we're big, we maybe can undercut them on prices. Let's say Amazon starts making their own Amazon TV, etc. What is stopping a company like Amazon to steal Roku's lunch? Now, the easy answer is yes, Roku has all of that data, more data than everybody else. They're already in the center of attention. Everybody's working with Roku, which by the way is another bullish point. If you're a streaming platform, a new one, you would need to be on Roku because, well, if you want to be recognized, if you want to have exposure, you would want to be put on Roku. So if you want to share your opinion on this, please leave it down in the comments below. And that will be it for this video. If you liked it, consider leaving a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.